So the acceleration principle is an economic concept that draws a connection between changing consumer pattern and capital investment. So when the consumer patterns change, that is when the taste of consumer changes, when appetite of consumer changes, when demand changes, when the income changes, now that change, how does it accelerates the capital investment in the country? We will be going to learn that in acceleration principle. So in acceleration principle, it is nothing but how the consumer changes accelerates the capital investment. So acceleration principle is an economic concept that draws the connection between consumption pattern and capital investment. So what changes in consumption pattern accelerates the capital investment is nothing but the acceleration principle. It states that if the appetite of consumer increases, that means if consumer are demanding more, that means if demand increases, demand for equipments and other investment necessary to make these goods will grow even more. So now if demand of goods increases, now the producers will produce more and more goods and services. So if demand increases, production will also increase, or the need to produce more will also increase. So need to produce more will also increase. Now how they will produce more goods and services? By employing new investment. Okay, so they will buy new investment. So that is how change in demand will accelerate the investment in the country. So if the change in demand is more, then the investment will also increase. So it states that if appetite for consumer goods increases, demand for equipment and other necessary investment to make these goods will also increase. In other words, if the population's income increase and its residents as a result to begin with consume more, there will be more a corresponding but a magnified change in investment. So now if income increases, eventually the consumption will also increase. That means that demand will also increase. So if income increases, demand will also increase, and if demand increases, investment will undergo a magnified change. So in other words, if population of income, or that is the income of the entire economy, that is the income of the entire country at once, if it increases, so what will happen? The consumption will increase, the demand will increase, which in turn will increase the investment of the entire economy. The acceleration principle is also referred to as accelerator principle or the accelerator effect. So the other name for acceleration principle is nothing but the accelerator principle or the accelerator effect.